Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AFX, we have you covered. The future of Forex is zero commission. Here at AFX, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stock Sniper Trading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey everybody, welcome to Stock Sniper Trading. My name is Ron, my partner is Dave. Welcome guys, it's just after 1 p.m. Eastern. It's Monday, October the 30th. We're almost done this month of October and moving on to a new month of trading in November. So thanks guys, I appreciate all of you guys joining, everyone on Zoom. Thank you guys for joining. Appreciate all of you guys. Everybody on YouTube, appreciate you guys as well. Thank you guys for joining. And today we're going to do something different, guys. Okay, so normally we do scalp these markets on a daily basis on the lower time frames. What I'm going to do specifically, I'm going to try to do on Mondays is it's going to be a dedicated session towards swing trading. Okay, so something that we don't do as much, which we should be doing too, is educating and analyzing the markets on higher time frames for possible swing trades. So today, guys, we're not going to be looking at the 1 minute or 5 minutes, the lower time frames. What we're going to be focusing on is we're going to start off a top-down analysis with the monthly, and then we're going to work our way down to the weekly, and then we're going to kind of figure out the daily 4-hour for maybe possible nice setups early for this week. So that's why I want to do these sessions on Mondays. Normally we used to do these on Sundays, but everybody's busy Sunday with family. So we're going to start early Monday with swing trading. And what we're going to do is specific securities. So today we're going to look at precious metals and commodities, which is good to look at right now with everything that's going on around the world. So today, guys, I'm going to focus on swing trading with gold and oil on the higher time frames. Okay, and next Monday we'll do swing trading. We'll maybe look at index related securities. Maybe we'll look at the S&P. We'll look at Dow Jones, and we'll look at possibly Nasdaq. And then the following week, Monday, again, we're going to do swing trading, and then now we're going to introduce Forex. So we'll start to look at some common, popular Forex pairs, GBP USD, Euro USD, or GBP JPY. Like we'll start, and I'd like to do this every single Monday as much as we can, because I know that there's a lot of traders that want to learn how to swing trade also with their scalping. Okay, so guys, just bear in mind we're not going to be looking at the 1 minutes today. I know it's exciting, it's fun. We'll save the lower time frames for analysis tomorrow on Tuesday. Wednesday we have FOMC FOMC this week. We're going to go over everything. Friday is NFP, and then Thursday we'll do a little bit of 1 minute scalping, okay? So if you guys are all good with this new lineup, this new kind of scheduling that we're going to do here, please hit the like button on YouTube and subscribe to the channel so that you can join us in all of these live calls that we do, okay? So guys, I just want to wish everybody, I hope everybody had a relaxing weekend. I hope everybody had a nice weekend with family and friends, back at the markets. We only have today and tomorrow, and then we're starting a whole brand new month, November. So with November comes a brand new monthly candle, comes brand new momentum in the market. We're getting that much closer to the end of the year, okay? So hopefully everyone is doing good. Hopefully everyone is surviving this 2023 as we make our way towards 2024, okay? And I will leave Bookmap on, even though that we're going to do a higher time frame swing analysis on higher time frames. I'll leave it on gold. It's set up on the 15-minute time slices right over here, 12:15, 12:30, 12:45, 1 p.m. Eastern. We're getting really, really close to 1:15 as I'm speaking over here in the next 2-3 minutes, this vertical dotted line. If you are trading gold today on the lower time frames, we are currently below the VWAP. Cumulative volume delta negative 500, so there is some selling pressure in the market absorbing all of the buying liquidity currently, and we're going to move on looking at everything today. So guys, if you guys are scalping, if you guys are in any trades, just please, proper risk management, but I will be focusing on the higher time frames today, okay? So I hope everyone is okay with that. And with that being said, let's move forward. So first thing first, before we even get into the charts, news, okay? So hopefully everybody has done their news analysis either today or on the weekend. Prepared yourself. So number one, hopefully you guys in Europe know that you guys needed to change your time, okay? Daylight savings time over here in Europe. Make sure that 1 hour difference can impact you when you guys are trading. For us in North America, I believe it's this Sunday, November the 5th, where we need to change our times, and we'll catch up with you guys. So number one, before we even look at anything, make sure you guys get your clocks up to date in Europe and around the world, okay? We'll catch up with you guys on Sunday. Today, news-wise, okay, so let's go through the markets. If you were trading in London, we have some red folders throughout London today. German, Spanish, we have a lot of things going on. As we get into like Wall Street, did we have anything today? Not much. But if we're trading at 3:30 p.m., Canadian news, red folder. We have Governor Macklem speaking here at 3:30 p.m. right before the market close. Will it impact the markets drastically? Not really, okay? But if we had a U.S. representative speaking here, maybe near the close of the day, it might be more impactful. But still, we have to give respect to any red folders because it could bring volatility in the markets. If you are trading later tonight, 9:30 p.m., anything to do with the Chinese market here, there is, or Bank of Japan, anything here. A lot of times, guys, when you're trading JPY or anything to do with the Bank of Japan, a lot of it is tentative. They don't give you a time like here, 9:30, 8:30, 8:01, 8 p.m., something. So it's kind of difficult following the news, but you have to have a heads up that there will be 3 red folders tonight in the Asian session that could impact you if you're trading. So anything to do with if you're trading GBP, JPY, anything, make sure you are aware of that. Tuesday, guys, tomorrow, okay, so what is going on? We have, again, JPY. You see, it's in the London session. Bank of Japan press conference, tentative. Again, we don't have the time, but around the London market open, should be aware of it. As we go tomorrow into leading into Wall Street, right over here, 8:30 a.m. Eastern, always very impactful throughout the week where we have a lot of news. We have Canadian GDP month over month. We have USD employment cost index coming in. As we move more into Wall Street at 10 a.m., we have a red folder tomorrow, 10 a.m., consumer confidence report. Okay, so we want to see consumers, how confident they are in the markets right now. That will impact everything as we go forward. And then if you are continuing to trade 5:45 p.m. Eastern, you have some NZD New Zealand employment change, unemployment rates coming through in here if you are trading those specific securities. What I want to get at too is over here, Wednesday of this week. Okay, so Wednesday, not only do we have FOMC, but even before that, okay, so if you are trading on Wednesday, Wednesday, November 1st. First of the month, new candle, new volatility, new momentum, new volume over here. If you are trading in Europe, make sure you are aware. French bank holidays, Italian bank holidays, you got some closures over here in the European banks. As we move into New York, 10 a.m. Eastern, you have some really big folders. ISM manufacturing, you have JOLTS job openings, so we'll see how many jobs they're creating over here. We have ISM manufacturing, so a lot going on Wednesday at 10 a.m. We will be streaming this call together right over here, as long as the likes get up there. Okay, guys, so FOMC 2 p.m. We're going to go with maybe a 1 to 3 p.m. session over here. We'll cover FOMC. Federal funds rate, we can see 5.5%. What are they forecasting? 5.5. So that's what they're saying is no change currently, but we'll see the actual numbers at 2 p.m. when they come out. So if there's a 0.25% increase, we could see possibly a sell-off in the market because maybe it's baking in current no change in interest rates. If they spike it up a 0.25%, that might see the markets sell off. If they, for some reason, maybe decrease 0.25%, that might be seen as a positive and move the markets upwards in a bullish momentum. But typically, we are seeing no change right now. So we're going to learn a lot about the JOLTS job openings at 10 a.m. That might factor in Jay Powell's decision on these interest rates. So remember, this is not set in stone. Just because it's forecasted right now, that doesn't mean that that's what the actual number is. We'll see when they release it, okay? So that's at 2 p.m. Eastern. Then we have this important session over here too at 2:30. This is the press conference. This is where Jay Powell gets in front of the podium and he actually speaks. So this is when the markets are also very volatile. Now he gives guidance. So he gives guidance on why this number was either didn't change, increase, or decrease, and then he's giving guidance going into our last FOMC in December and for the remainder of 2023. So this FOMC and one more we have coming are very important. So please, guys, if you are trading this, proper risk management, as we always say, because it could get very volatile, okay? So that's Wednesday this week. Moving into Thursday, we've got a lot going on over here, 8 a.m., okay? If you're trading anything to do with the pound, okay, 8 a.m., you should be aware of this. 1, 2, 3, 4, 5. You got 5 red folders. Bank of England monetary policy report. You have a lot going on here. Your official bank rate is 5.25, so we'll see what happens over here. And then you also have Bank of England Governor Bailey speaking. So and very volatile. If you're trading anything to do in Europe with the pound, euro, if you're trading DAX, anything like this could affect what you're trading. We get into 8:30. We have our red folder, U.S. unemployment claims. This comes out week over week every Thursday morning, and specifically we have NFP on Friday, the first Friday of every month. That will be Friday, November the 3rd. This is big, guys. NFP, okay? This is known to destroy retail accounts. I don't suggest you gamble over here with FOMC or NFP. This is a very volatile week, guys. That's why I'm taking my time to talk about this. So make sure you guys are aware of this. If you guys have had a good month, if you guys have had a good week, if you guys are having a great momentum in your trading, don't go over leveraging and blow everything just because this week is FOMC and NFP. You might give a lot of your profit back to the market because this could be highly volatile, okay? So please trade with proper risk management. We do have a lot coming out of Canada and US Friday morning, okay? And then also 10 a.m. ISM manufacturing. So that is this week, guys. And then as we get into the weekend, make sure we change our times over here in North America, okay? So also earnings. Thursday, okay, is a big day for earnings, specifically for Apple. Okay, so if you're looking at your earnings, we have a big week ahead. This is Earnings Whispers. Come on here. You can start to see some pre-market earnings. You can start to see aftermarket earnings. Who is reporting? What are they looking for? Earnings per share, revenue. Is it a beat? Did they beat the estimates? Did they not beat the estimates? It might impact the specific security you're trading. So just keep in mind, Apple. It's it's a big name. They are reporting Thursday, so we will see what FOMC does, how Apple will react, and then we go into Friday unemployment claims. And going forward, so just right over here, this tab, stocksnipertrading.com, guys. If you want to join us, this is our schedule, okay? So we got some London sessions. We do have the Wall Street sessions. Monday and Fridays are to be determined right now. And we also have some post-New York sessions. These are the live sessions with this time frame that we're doing. So remember, guys, Mondays we're going to do some swing trading. Thursdays will be some 1-minute scalping, and then we'll throw everything in between. We got a weekly webinar on Wednesdays, and so we're going to throw in some more Asian sessions as we go along. It's only 4 degrees where I am, but when I start to see that get in the negatives, I won't be outside as much, so I'll be indoors, so we'll be doing more Asian sessions. So hopefully that can help people around the world too that like to trade the Asian session. Okay, and we do have a signal channel over here. We've sent out some signals today. US 30 is running, so this is kind of what we look for, this area to hold up. It did hold on the pullback, still having volume close above and continuing to break out. So we're looking for continued breakout momentum. Okay, and guys, we also, just to finalize just this before we get started, if you want to join our free Telegram group, it's pinned at the top of the YouTube. It's this one right here. Please, guys, don't fall for any scammers. Dave and I will never message you guys asking you to give us money and we'll give you $5,000 in return in a couple weeks. So remember, guys, be cautious, be suspicious if anyone asks you that. If you have any questions about anything, email us, get in contact with Dave and I. And but this one is our real free Telegram that we have. It's pinned at the top of the YouTube if you want to join. We do have a lot of useful information in here. Sometimes you get free trade setups you can follow, and just a lot of things that we're doing at SST. Okay, so let's get into the charts now. Okay, so I'm going to get started with gold. Okay, I'm really excited about gold analysis on the higher time frames. Okay, so if you're trading right now, gold is selling off. Okay, so below 2,000, this block. Okay, I'm not looking to scalp, but here's the block of 2,000, that psychological area. Did we have any green volume today closing above 2,000? Not yet, not yet, not yet. They got rejected there, another rejection, triple top, bring it down, some volume close below the neckline, pull back, bring it back down, and then now you got the big push down. So if you're in a sell on gold, congratulations, guys. But you can see how no lower time frame volume closed above 2,000 in order to take out these highs over here at 2002. So the supply is being lowered and lowered and lowered. And if you're in a sell, congratulations if you guys got that. Okay, but what I'm going to do is I'll leave the Bookmap on over here. Okay, so this is Bookmap, guys. This is a live liquidity platform. It's on the futures. So you can see right now in the futures market, it's trading around 2005. You're going to say, well, we're here at 1995 at over here. How is it trading over there? This is the futures market, okay? But what I use is I use the futures book, and I use it alongside with TradingView by marking up my own zones. But I follow price action, guys. I don't just follow numbers here. I follow price action. So I kind of figure out where the bigger blocks are in the market, where's the support, where's the demand. If in here you can see that there's a lot of heat up here, so you see a lot of offers up there, you can kind of see where the supply is in the market. Okay, so I'll leave this on the 15-minute time slices. If you are trading on the lower time frames, I'll leave this for you. But if you guys are focusing on the higher time frames now, I'm going to get started with a top-down analysis. Normally when we do this, I start off with the daily, and then we move into the hourly, then we get right into the 5 minutes. But now today's session is going to be all about swing trading. So how many of you guys swing trade? How many of you guys hold positions for multiple days? Do you guys do that? Is there, or are all of you guys mostly intraday traders in here? Are most of you guys scalpers in here? I've done swing trading, believe it or not. Okay, I have a history of being a swing trader as well. But I also like to scalp the markets, but I can do both things. I could have a swing position open right now in the market, and I could be scalping the market as well. Okay, so what I recommend is have two accounts. Have two accounts open with your broker. One specifically for swing trading, so you know when you're trading that account, your mindset is swing trading. And have another account for lower time frame for scalping or intraday trading. So you know when you're using that account, your mindset is focusing on scalping and intraday trading, so you don't conflict both of the accounts. Unless you're really good, you can come in the market right now and you can say, today I'm going to scalp the markets. Or you can come in the markets and you can say, I'm going to be a swing trader and hold trades longer. But there's different risk management used for different styles of trading, okay? But what we're going to do is start off over here. Look at guys, I'm starting now on the monthly. Okay, so we're going to look at gold on the monthly. Like if we look overall, okay, I know some of you guys probably weren't trading in over here in the 1970s. How many of you guys were trading in the 1970s? I wasn't born till 82, but I read up a lot about history to know what was happening over here. Does anyone know what happened in the early 1970s with gold? That does anyone know? Like, I know that a lot of you guys are not into history here. You don't have to be, but 1970, early 1970s was a critical time in the market with gold specifically, and the US dollar. So Nixon with the gold standard. Okay, if you guys want to look, I'm not going to give a whole education today about the whole history of that, but if you guys are looking for a good little read or to learn a little bit something, look into Nixon and what is the gold standard. Okay, so this is when it started. You can see gold started to push up again, higher highs, higher lows. It pulled back down. We found some resistance over here and continued to push up in the 80s. Gold got up to $875 an ounce here, pulled right back down. Look at levels of support. So I can see even on here, on the monthly, there's static zones, okay? But now we finally broke above this high over here. We had volume close above. It pulled back, higher low, continued to push up, grab that liquidity. Then we broke out of here in this big move in 2010, 11. We got up to 1900s. Then it pulled back. So guys, when I'm looking at big zones now on the yearly, on the monthly, this area looks like a big area of demand for gold. Okay, so I'm going, like you can see, this has nothing to do with what we're trading today, but it's nice to know, where did a lot of buying on gold happen? It happened around here, 1100. Yes, there was a liquidity grab that broke down, but it came right back. Volume close above, retested this. So we're kind of holding this area. From 2013, yes, it did break in 2015. It came back 2016, held. We retested in 2018. We were trading gold at this time in 2018. And you can see monthly candles. If you want to be a swing trader, I don't recommend necessarily trading with swaps and things like that. But you can also buy and purchase physical gold. I do too. When the time is right, I always buy on big pullbacks. So I'm a big buyer of physical gold when it comes into these areas. I was a big buyer of gold when it tapped into 1600 right over here. And you can learn how to be a swing trader with physical commodity as well. You don't need to just trade with swap all the time. DXY is getting smashed right now, Juanito. Yep. Not kind of looking at that right now, but that's good observation. If the DXY is going down, we should see bullish move on gold. But right over here, guys, so you can see how every time it came up in this area, 1400 and a quarter, it rejected it. Came back up, rejected it. Came back up. What happened at 1400? Rejected it. Came back again, rejected it. Finally, this bar, June of 2019, this is a monthly candle, it closed above with volume. So just like when we're scalping the markets, same concept. There's resistance, resistance, resistance. Now, did the volume bar close above? Yes, it did. So it was accumulating for how many years? Since 2013, it accumulated for a good 6 years. Okay, in this range right over here. This is a consolidation zone. This is a sniper trapping gap. We're smart, guys. Remember what we tell you. Volume has only 3 directions. I know we're looking at the monthly, but if you want to be an investor or a swing trader, then you're going to have to understand that whatever we learn on lower time frames, you can still do the same principles on higher time frames. And you can see that we have 3 directions. The volume can trade inside this range, which is a nice range. Okay, it's not bad, but volume will eventually move in once it accumulates enough. In this situation, did it break above, close above? Yes, it did. Did it retest this area? And then did we have our next move up? We did. Or it could have also came back down here, closed above like it did down here, but when it came to kind of retest this area where we flip it red, did it get rejected and pushed back down? In this situation, it came back and it closed again inside the box. So we had to consolidate. So it wasn't really allowing it to push down to sell off because there was good demand set here and held. And then our next area targets are specific areas. Will gold come back up to these 2 wicks at 1920? And yes, it did. And it had enough momentum to break for a new higher high. Those are our all-time highs up here. This was all-time high 1. This was the all-time high 2nd hit. And then we just recently had another 3rd all-time high hit. So we have a triple top at the all-time highs. Now look at our monthly candle. Remember, this thing is going to close in 1 day and 4 hours. Okay. I'd like to see if they close the monthly candle above 2000. That's that psychological area. And if we continue to build in November and possibly December, gold could be looking to take out these all-time highs around 2070 and continue moving up to an area where you and I have no idea. We don't know where it could go because price action has never visited up there. That's all-time high territory. So we got to use some sort of technicals to figure out what could happen up there. Do you guys understand what I just explained right here? Do you guys understand that? That this could have been, these could be 1 minute candles, right? These could be 5 minute candles. And we had a candle body with volume close above and retest and continue to move up. These are monthly candles, okay? So what we learn on the lower time frames, you can apply on the higher time frames. Same principles, same characteristics, okay? So now when we establish our zones, we can bring these things across, okay? Just like here. This was a big demand zone. Will gold ever come back down to 1150? I don't know, but if it ever does, I probably want to buy down there, okay? But we have another area here that used to be resistance turned to support. So before we can come down to 1150, if we stretch this zone across, maybe gold needs to come back down and test 1380 down here before we even break down here because we've built a level of support. Okay, and then now over here, I can see where they spiked it out and brought it in, but I see more bodies in this area. So over here, I can see an area of resistance right here. Yes, I do see those ones above me as well, but I'm kind of coming down where it came, got rejected there, came up, got rejected there, came up again, got rejected, where there's more rejections. This is a critical area, but I'm more focused down here because more volume got rejected here. So if I bring this zone across the chart, okay, I'm making it red right there. I'm going to bring it across. Guys, does this analysis help you? I'm spending more time on this on the first chart. Normally, you'll see the next chart with oil. I won't be doing this, okay? I kind of just want to get everybody focused on higher time frames, okay? I know everyone's probably asking, why is he doing this? Why is he doing this? But if you did this, look at what I'm saying. You could have been a big buyer on gold on the wick of this month, okay? You guys see what I do the same thing with 5 minutes and 1 minute. No difference. This was a monthly area of resistance. We draw our box red, and now volume closed above. So all we have to do is change the color to illustrate that it is a support level. Okay, does that make sense? So yes, we did break below, but that could have been, these are monthly candles. Okay, so you see when it got rejected, maybe I wanted to August 1st sell gold. It closed below, kind of pushed down below there. If I sold gold here at 1760, maybe I'd place my stop loss at about 1850. Bigger stop loss because I'm looking for a bigger reward. And when it started to drop down, all the way down into here, 1618, I see that the monthly candles are not breaking or closing below. They're like triple bottoms down there at areas of resistance right over here. Like if I see the monthly candle too, how much they tell you. Remember 50% pullback, the body, red, see the first green pullback into 50%? I look at these things, guys. I always look at these things. So kind of if I drew that wick where it came right up and got rejected there and continued to push down, look at how this purple line in the future, how it might come into play. And you see where we came down? Right into that area. And it got rejected 1 time, 2 times, 3 times, and then started that big bullish move. I bought a lot of gold, physical gold at this time in the market when it was coming down to 1620 down here. It was a good buying opportunity. It was a nice pullback into demand, still holding above here. And what happened on those monthly candles? It didn't break here. So if I'm drawing another zone, before we hit this big box, maybe we're going to come trade back into here, and that could be another zone where, like for example, this red candle or green candle, if we get rejected and gold gets rejected hard at the all-time highs up there, and we can't hold this block, 1800, then possibly we might come back down and trade in here and maybe go back up and then close here and then take out that big all-time high, and who knows where we're going. Okay, so you see how I'm just drawing my levels, and these are static zones. These can stay on my chart forever. Okay, and then I just wait for the volume to come down here and then see how it reacts. And then if it gets rejected, maybe I'll put in a buy, but it's not going to be a buy to scalp the market for 5, 10, 15 minutes. It might be a buy of gold where I'm holding for multiple weeks or maybe even months. What we're going to do is we're going to dissect these monthly candles down to the lower time frame. So now let's visit where we are right now on gold. Okay, so do you guys remember, okay, if you were with SST, we traded these all-time highs live. I remember these vividly. We shorted this wick up here. It was on the lower time frames, but it was fun to short the all-time high. It came up here in August of 2020. Okay, August, when we think back in 2020, that was a weird year. That's when in March, COVID started. Okay, so COVID brought a lot of indecision in the market. Not just the market, it brought indecision with myself. I had no idea what the hell was going on. What is going on? Is this a pandemic? Why are we getting locked down in our houses? Why are we wearing masks? What is going on? While all that was happening, gold was going to an all-time high territory, okay, in August, in the summer months. It got rejected up there. So why don't we place a purple line at the monthly high? You know, just like I kind of do with the daily high, let's do something different with the monthly high because we're on a higher time frame. So I'm going to place a purple line up there, okay? If you guys want to do this on your charts too, you're welcome to follow along. But do you see when we came up there? All-time high. That was the first all-time high of gold. It got rejected, okay? How did it reject? A spin top candle. What are the characteristics of a spin top? Lots of indecision. You know, when gold opened this monthly candle in August, it came and hit the all-time high, but somebody sold the market up there. There has to be someone who sells the market, and they sold it, and it came all the way back down to here, and then buyers came back, and we closed with a bearish spin top candle. So it's a lot of indecision at the all-time high. And then what happened going forward? We came back down. Sellers were in control. Back down to this area of support. It held on the monthly candle, came back up. Did we take out any of these highs? No. So we essentially have a lower high where they pushed it back down, and we pushed and closed below our critical zone. And it dipped down a little bit, but we came right back up. Again, big bullish candle. Look how our monthly candles open too. They're very manipulated. Like, see how short the wick is? It opened green. It should have popped and filled these prior wicks and maybe came back up here. But they kind of shut it down. big monthly bearish candle, bring it right back down. We consolidate. There's an impulse monthly candle that came back down. Look at the tweezer lows. This wick is identical with this wick right here, even on the monthly, guys. So ask yourself, how is this possible to, on the monthly, sometimes we see it on the minutes, on the 5 minutes, where it's equally the same level. So we can see even there is on the monthly candles, has an equal low, held, didn't break support structure, came back up, and then we consolidated. One more time, there was a big rip right here, March of 2022. There was a big push again to that all-time high. And what happened when we got up there at 2070? We couldn't take out the previous all-time high. They rejected it and closed it down here. We came back up, but remember the size of the wick. Okay, just like when we're learning the lower time frames, the size of the wick matters. This is a long rejection wick. The buyers got exhausted. The next month again, they opened up bullish but came up. But we have a big wick to fill, and then it was easier for the supply to come back down and take the buyers back down. If this was a shorter wick like over here, yes, it could have popped and filled. But this is manipulation, how it opened on the next month. They didn't allow it to break, and they brought it down. Okay, and when we came down there, we dropped. Gold was selling off. Okay, April of 2022, we sold off. We came down where we found a nice bottom down here at 1620, held. We came back and traded in our consolidation zone, where again it went green, red, big bullish candle starting March of 2023. Now I'm walking us through our last year. Okay, and we came up multiple times again up here and got rejected. So I'm going to draw a red box up here just to give us visually an area of reference where it is red. Okay, so that's a big, this is coming from, what was the year here? 2020. Okay, the next time we hit it in there, 2022. We came in here 2 times in 2023. So this is yearly supply. Okay, all-time high supply for the matter. So I'm going to stretch this across into the future. Okay, so let's take a look at our monthly candle right now. Very, very important candle. We came down into here. What was our low of the month? 1810, and it's a big bullish engulfing candle. We've almost engulfed. Look at how much months of work we've almost engulfed. September, August, July, June, May, possibly April. If we close above here strong, we might have a strong November on gold. And why are we targeting all-time highs? Is, guys, unfortunately, I don't like to say this, but gold moves with war. Okay, hopefully some of you guys are all adults here and we understand this. Gold is seen as a safe haven when we do have wars. If you look back at the big rips of gold, go back in history and look. When did the wars start in Iraq? When did the wars start in Syria? When did the wars start in Libya? When did the wars start in Afghanistan? When did the wars start in Russia and Ukraine? When did the wars start in the Balkans? When did the war? I can continue going on and on and on and on about this, but that's how markets move. Unfortunately, markets move with war, pandemics, fear, and all kinds of things that they can instill. And a safe haven is precious metals, crude oil. Okay, that's what wars are constantly about, is about precious metals and commodities and things like that. Okay, we might have another war starting soon with China and Taiwan and that side of the world with conductors, and it's just, guys, there's nothing I can do about it, but that's the way how the worlds work. Okay, unfortunately, innocent lives are lost, and that's the sad thing about it. So our prayers are with all the innocent lives over all of this corporate greed and bullshit that these guys start. Okay, and that's just how I'm going to leave that right there. But if you guys are trading, we got to know what is going on. Okay, there's more to just candles in the markets. So when did this all of a sudden start with Middle East tension? This month. And you can see the volume on gold, how it's building. Okay, so critical psychological levels. Can we all agree that 2000 is a psychological level in the market. I'm just going to place a yellow line at 2000 just to show you, okay? Let's place a yellow line right at 2000, right here, okay? What is going on at this area of 2000? Why is it a critical psychological level? Because it's a big level in the market. 1999 is completely different when we start to see 2000. Now you're in a bigger area. Okay, so let's look at the reactions, what happened at this yellow line in the past. We came up here September 1st, 2020, and they rejected it. We came up here again April 1st, 2022. It came up right up to 2000. This was a big body green candle open. It came up, but it's got a lot of, look at the size of the wick, it needs to continue to fill. So it's a big one. So it got up to 2000 and they rejected it. Again, look at where the volume closed. We came over here April 2023, back up and back down. We came up again, but couldn't break. And look at where the volume closed. It closed below 2000. Look at where we are right now. This is why I wanted to start these swing trading every week if we can do these, because we're getting into historic times in the markets, guys. If you're a trader, this is exciting times to be a trader, okay? Because there's a lot of opportunity that you could be getting in the markets in the next couple years. If you learn right now how to do this type of stuff. Okay, so our monthly candle is building really nice. Look at, we're right up to the high of the month. We're closing in 1 day and 4 hours. Okay, and then we're going into November. Are we going to close? I want everybody on this call to watch gold's volume to see on the monthly if we're going to close above 2000. Okay, once we close above 2000, maybe a small pullback, then it picks up the bids, and then we could be coming to take out these all-time highs. And I'll speak about where we could go on all-time highs. How do we chart all-time highs when we have no idea where it could go? That's why you got to use psychological levels in the markets, okay? So now, just judging our monthly candle volume and other critical levels in the market, okay? So I like to see here, I like to see bodies and pivots in the market. Here was a monthly push down, but look at where it held. Body, body. So I'm going to draw another yellow line right here at these bodies. And I like visually to look at always 50% of a big body candle, which I can see here. The monthly candle opened right here. So again, I'm going to place a yellow line at our critical open. It was side by side with our previous month. We closed here, we opened here. It opened red, we came down. But you see how it didn't break this block right over here? So it came down, picked up the liquidity. This is when all the crisis in the Middle East started, and there was a big demand for gold right at the demand area, which performed a higher low. So even if I'm drawing a trend line from right here, and I draw my monthly trend line, it's still holding above, if you guys use trend lines. Okay, so I'm just putting a trend line in the market to show that we are moving up, okay? But you see how we're ascending right up here, but every time we come up here, we've had no monthly volume close above 2000. It's impulse breakout and got rejected. Impulse breakout to the all-time high number 2 and got rejected. Impulse breakout number 3 to the all-time high and got rejected. Now we're coming up with a full big body candle. This is why it's very interesting, guys, okay? So any pullbacks on the monthly now where I'm drawing my zones, remember what I look for, 50% of the volume. Like even if this was a 5-minute candle, guys, even if we were scalping the markets, let's pretend this was a 5-minute and not a monthly candle. I always look at the open and where the volume is, critical area right here. And what I do is I kind of draw a green box, like right below here. I catch those wicks and bring it across. So I'm starting to see maybe if gold pulls back into just breaking 1918 down to 1900, that could be a liquidity grab. So I draw another green zone for support or demand to see if we hold. If we pull back, I want to see this area at 1925. Gold runs on quarter increments. 1900, 1925, 1950, 1975, 2000, 2025, 2050, all-time high 2075 up here, then we run to 2100 plus. Okay, so get used to quarter increments when we're trading commodities, oil and gold, on all time frames, okay? because it's got big blocks that have big orders in those areas. It's easier for transactions to occur. So if we pull back now, okay, what happens if we get rejected up here and that's our high of the month and then it pulls back down? Look at here. We have a body, and a body. So I'm going to place a yellow line here. Before we come down to the green box, what happens if we pull back right here? This is an important area in the market. Right around here. You might not have a perfect line. There's a body, we close below there we close right below, there we opened ignited. Where is this area? 1968, 1970, give or take. Okay, so you can see on this monthly candle, what I'm looking for is to hold volume above also this area. So I kind of draw a green box to give me reference, and you see where it comes down to? 1950. 1950 is another psychological block. If you guys trade gold, you guys should be aware of the 1950 block. Okay, so now we're looking, where could we possibly break out to? Look at the equal high breakout this month. When did we break out to? 2010. Look how it's equal exactly with March of 2023. Equal high up there. Did we have enough momentum to push those other highs to the all-time high? Not yet. Okay, so I'm not going to stay on the monthly this entire call, but are we okay with that yearly, monthly analysis? What do we predict as a team could happen with gold? Okay, so option one, we could fill and break out for a new all-time high. Let's look to the left of the chart. What do we have up here? You're not going to find much because it's an all-time high. So now we kind of got to figure out our areas up here. What is a whole number? If we break above 2070, 2100. So at 2100, I'm going to place a line up here at 2100. Okay, why 2100? I don't know. It's just a my guess that if we have like an impulse break from 2067, 2070, maybe it comes in test 2100. Could be an impulse breakout and go back down. But now I'm going to put it in like what I said, those lines, 2100. Do I want to do 25-point increments? Maybe for all-time highs, I go a little bit bigger. So 2150, like I draw another line up there, maybe 2200. You know, you got to go find those bigger zones up there. But for now, I'm not going to worry about where gold could go because it could go to 2300. It could go 2500. Analysts are even predicting that it could go 3000 an ounce. But that's, again, those are our guesses. I'm going to wait for monthly volume to close before I judge where it could go, okay? Because we still got to close strong. What happens if they reject it in the next couple of days? We start coming down. Remember this week what we have? We've got we have FOMC coming up. We have NFP this week. What happens if gold retraces all the way back down here? Then we got to figure out where our supporting levels are. We don't even need to worry about all-time highs. We might not get up there, okay? But now let's dissect the monthly candle, and we're going to break it down in increments. So what is my next time frame I'm going to break this monthly candle down to? Weekly. Let's go into the weekly. Okay, so now I've got my analysis on the higher time frames. Remember, purple line is like the all-time high. This line up here could be an impulse breakout if we do break for a new high to 2100, and we'll see what happens up there. If we do pull back on the weekly, you see I have my monthly area of support right here, my next monthly area of support, my bigger one. So I kind of want to figure out where the weekly candles are moving and maybe try and identify the trend or trap them as much as I can. So now just following how we started this week, October 9. Okay, so the start of October. Right here. This is when the crisis started in the Middle East. It was the Friday, and over the weekend, it kind of came down there and started this big move. So we have a big bullish engulfing Marabuzzo weekly candle on gold. Okay, it opened. There's absolutely no wick going down, and look at where it closed, right at the high. This is a Marabuzzo candle. You don't see too many of these on your charts. This is a very, very strong candle. Why? Why is this weekly candle so strong? Because look at where it opened. It opened right where the previous week closed. There was absolutely no pullback. It opened with demand ignited, and they continued to just fill up volume, buying volume, buying volume, where it closed engulfed above over here, and there's barely no wick to the high. So it closed right at the high of the week. That's very, very bullish if you ask me. Then the next week opened and pulled back just a little bit. Did we pull back into 50% of the weekly candle right here, 1886? No, it pulled back only to 1909. Why? Because there was strong demand for gold. The bids started to come back up here, fill, and then we came back. There's your weekly pop. If you are a weekly trader, this was your opportunity to get in on a weekly swing on gold. Ask yourself, why did you not buy gold up here? There's like, if this was a 5-minute setup, this is exactly what I look when I'm scalping the markets. This previous bar closed right at the high. I assume it's going to pull back to approximately half of it, 50%. It didn't. So it pulled back right into here, higher low, came right back up to break the previous high, and we have no wick. When there's no wick, it's easier to fill the previous wicks, and it did. It filled all the way back up to there, to 2000. Okay, so if you ask yourself, if you're buying at 1930 and it comes to 2000, you can probably do the math in your head. That would be a really nice swing position on the week for approximately 700 pips. That's not bad for a weekly trade. Okay, but look at the context. Look at when you look back at everything, how it was developing. Look at the double bottom on the weekly right here. See the first bottom? Back in February of 2023, nice big bullish engulfing candle, and then it came all the way back down, red, right down. Why? Specifically to pick up all the buyers there. You know how the market does not want to leave any money behind? Think about that, guys. Just think about this. The market knows, when we look at Bookmap, it knows where all the pending orders are in the market. If the market knows that gold is going to break bullish and continue to possibly attempt an all-time high, if you've got liquidity sitting in here, if you were a market maker, would you not want to come down and pick up all of that liquidity in order to make your push stronger with more volume? Yes, that's logical, what the markets or you and I would do. That's exactly what happened here. It came down red. Look at the large rejection wick on the weekly. This was another amazing opportunity to buy gold right here on the weekly. Look at how we closed. It closed as a bullish pin bar right near the high. You have another ignited wick, ignited bar with a short wick. There was the pop right there, and you could have taken your move. And then when I measure the move, come up to here to the yellow line, you figure out what you're going to do there. And it continued to move all the way back up. But now, let's see what's going on the weekly. So we closed last week. Very, very strong near the high. Look at how we opened right now. Okay, opening of the week. Did we push to take out that wick so far? What was it, 2010? No. It came back down where? To approximately 50% of our body. So let's now break down our weekly candle. Okay, so guys, I'm just going to get rid of the purple line for the all-time high, because I'm going to use this for the weekly. We know where the all-time highs are. Okay, the all-time highs are at 2070. Okay, so now I'm just trying to figure out where our weekly volume is. Right here, around 2006. Okay, and we got rejected up there. So I'm just going to draw a red box at the wick and bring it across now. Okay, so you see what we got to break this week to see if we can continue to push up. 2010. What happened? This week, we opened red. Okay, we have 4 days and 4 hours. Today's Monday, so it's early in the week, but we have a lot going on this week. We've got FOMC on Wednesday and NFP on Friday, so we don't know the direction where this weekly candle could move. But right now it opened, we came down red. What was our low of the week? 1990. Okay, that was our low of the week. Purple line. Okay, so our weekly candle now is kind of consolidating in this range. If I bring this red box across right through here, I can see where do we have some volume. I'm going to bring it up where the volume was, right up there to that body, 2017. When we're above 2017, I don't see any volume closing on the weekly above 2017. They were all impulse breaks. So guys, if we get nice weekly volume building and we can close not only above 2000, but more importantly, we get weekly volume, can close above 2017, we could maybe get that momentum to try for a fourth time to break an all-time high. But right now, the market could be lowering the supply. Okay, you see on the weekly, they lower it and they opened it red with a lower high and push down. So we're going to see if the red volume continues to push down. If it pushes down, let's look at where we have support in the market. Okay, if we look in the past, over here, was this not a support level that held the market right there? I'm going to say it was, because the volume came down, but it closed right there. The volume came down again, higher low, and closed up there. The volume came down red again, one more time, higher low, higher low, higher low, held above here. That is support. That's why we pushed back up. Now, if I bring this across, I see that we came up green and got rejected, and the volume pushed down. We came up green again in this zone, they rejected it and pushed back down. So let's make this zone red. And then let's stretch it across. Again, we came in weekly right in there, impulse breakout, they pushed it back down. Came in again, pushed it right back down. So this is a zone I'm going to stretch forward, and you see now we've got green volume above. So now all I'm doing is flipping this weekly zone green and bring it across. Okay, I'm trying to trap the volume as much as I can, because now I want to go maybe dissect it down to the daily candles. Okay, so we might consolidate this week inside here. It might come back down to 1982 and then find buyers and try and come right back up. Okay, but right now it is still holding a higher low support right here. Okay, so now what I'm going to do is dissect the weekly candle. Okay, so we see the big area right here. When we came up here, it got rejected 1, 2, 3, 4, 5 times. All wicks, no volume. The market came up very, very strong on gold, right back into this zone, and they rejected it so far. But it's early to say in the week where we could go. It just came down, coming right back up. If it comes back down, we're going to test this big block down here. We'll see if it holds. If it holds, there's the bigger block where the big buyers could be. Okay, but let's see, maybe it holds here and we continue to come up. This could be like a move. You know, when I'm looking to scalp an imbalance, I measure the move. Like if this was 5 minutes, I measure from there to there. In this situation, it's about 300 plus pips, so it's a big move up there. Okay, so we do have to watch that. Now what I'm going to do with the weekly is break down the weekly into a daily. Okay, so most traders like to trade daily candles. Now that we have our grid all made up, this is where you can trade. So even if you're looking to sell, okay, you can see an M top came up there. That should have been red at that time, okay, and came back down, came up again. Rejection wick. They lower the volume, the supply, and there's the break. Could sell 1890, come down to the yellow line 1850, collect some pips, but it came all the way back down to the 1800s down there. And when it did, it came right back up. So we're trading now zone to zone on the daily candles. Some traders prefer swing trading on the daily, and some prefer doing it on the 4 hours. Whatever you like to do, that's up to you, okay? So just want to kind of now clean up this chart now. Want to keep my bigger red zone. Want to keep our weekly low right there. So how are our daily candles trading? Now, if I'm following these things, daily candle is going to close in less than 3 hours today. I kind of want to mark up where that wick is, that previous high. Is volume going to close above 1997? That's why I always say to gold traders, keep an eye on this 1997 level. It's a very critical time in the market for gold. It's right near that 2000 block, but 1997 is also, when it pulls down, let's see if volume will close above. So if we get this closure and it comes back up, maybe tomorrow or next day might be a green candle ready to break out from 2009 and come up here. If we break above there, now when I'm not scalping, but swing trading the markets, when I'm scalping, I normally look at measured moves, where it could possibly go to. Okay, so right here I see a body to body and a rejection wick. I see also bodies right there. So I might draw one line in here to maybe if it comes up there, 2030, that might be an area to maybe scale out a little bit, okay? And that might be a 300 pip move, but you might have to learn to not entirely close your swing trade, but take a little bit off the table, just like we do when we're scalping. Make sure you go to a break even. If it goes up there, trail your trade, secure some partials if you can, okay? So right now, we're coming off of a big bullish candle on Friday. Let's talk about how they closed gold last week. So it opened, came down, higher low, closed above 1997, closed near the high. Today, Monday, when they open up the markets, we came up, we didn't break the previous high, so it is bearish. It came down red all the way down to 1990, and then now we're coming right back up to about 1998 where we're trading. So you see how it's kind of like a magnet towards this 2000 area. Now what I do for swing trading is to take trades. I like to take trades on the 4 hours, okay? So the 4 hour candles, let's see what they're doing. The 4 hour candle right here, Friday at 1 p.m. So this was the closing candle from 1 to 5 p.m. It closed very strong. Now this is where we opened Sunday night. Okay, you can start to see the Asian session. We came down, we made our lows down here, and now we're coming right back up on the 4 hours. So what do we see here on the 4 hours? I see a previous high and a new high making a higher high. Sometimes I like to look at my RSI. Okay, when it made those highs, it was extremely overbought up here at 85 on the 4 hours. And now it's showing me there is bearish divergence. Is that enough for me to take a swing sell? Not yet. No, because right now it's consolidating right near this 2000. You see the 4 hour candles. Are these candles that we can trade? We've got a bullish pin bar the last 4 hours. This 4 hour candle is going to close in less than 3 hours. We came down, it's coming right back up. So what I'm looking for is maybe to see how gold will react if it can come back into this red box. Is it going to take out that high and push? It could. Then if it gets rejected, I could look to sell below 2006 and take it down. I could look for a swing trade to sell. But right now it's consolidating inside here right at this daily range. So on the 4 hours, maybe I got to let it consolidate here and figure out how this thing, because it's at the neckline. You know, sometimes there's a time and place when you're trading and it's the best time to take a trade. If this was a 5-minute setup, I would box this area in myself and I would wait for it to break out bullish and see how it would react at this previous high up here at 2010. And then if they push it down, if volume kind of closes below here, that could be my swing trade to sell gold. And what I'm looking for is I'm looking for red volume to close below here, maybe retest this and get rejected, and maybe that's where I initiate my sell order, and then I look for it to break the weekly low, the purple line, 1990, and then drop down into this box, 1980, and that might be my swing trade of the week. I could be looking to sell gold below there, and then when it comes down to this green box, remember, decisions need to be made because sellers sold down into the green box here and it came back up. Sellers sold into the green box and then it came right back up. This could sell one more time back down in the green box, and if we don't do anything, it could pick up a big buyers and have the big bullish candle print like this and come right out of there. If we're still in this position and it closes below here and retests this and we flip it red, yeah, then gold could come all the way back down and trade down into here, and we could maybe extend our position and add more swing sells in the market. But right now, if gold comes back and kind of closes above here on the 4 hour, like if we close above here, we might be building some momentum where we could look to buy up here 2000, above 2000, and maybe get that push to take out 2010 and squeeze up to 2017 and maybe up to 2030 and continue squeezing short sellers on gold on the higher time frames. Okay, but right now it's not in an ideal area where I want to be trading. Okay, I got to let it build. We know we have one top up here, but it could come up for the double top or close with nice positive volume, and when we flip our boxes, then we could be breaking out for higher highs. It's hard to say right now with everything that's going on around the world, but that's typically how I position myself for a swing trade. Do you guys have any questions on this? Because I know it's over 2 o'clock. I want to do oil with you guys. Everybody in Zoom, I'll give you guys this chart. I know maybe if you want to just look at it, it's up to you, but I know I took a long time. Normally, swing trading, I don't take this much time, but I really want you guys to get in the habit of focusing on monthly, weekly, and then you pick whether you want to trade the daily or the 4 hour. You see how I'm not going down to hourly? I'm not going down to 30 minutes. I'm not even looking at 15. I absolutely don't care about 5 minutes or 1 minute. When it comes to swing trading, we're looking for higher time frame moves. And then also you got to factor in your risk. You know, when we're trading on the 1 and 5 minutes, our risk reward is completely different. This too, you got to measure the moves. Okay, these are big moves. So if you take a trade, you have to factor in how much pips you're willing to risk. Okay, you're not going to swing trade gold and just put in 20 pip stop loss like we do when we're scalping the markets. You might have to use a bigger stop loss. You might have to use 100 pip stop loss, or even more. Some swing traders use bigger ones, but your reward is not, you're not looking to make 20 pips or 40 pips like we do when we're scalping. You're looking for 200, 300, 500 pip reward. You're looking for a big move, but you also have to be able to risk a little bit more. Okay, so with bigger risk, you reduce your lot size. You're not going to be trading with big lot sizes if you're risking 100 pips and you're doing a standard lot, unless you have a big account and you're ready to risk that much. Okay, but this, you also, as a swing trader, you got to give it room to breathe. And another thing is, you cannot just watch these things. If I'm swing trading gold right now, for example, let's say I bought down here, I would have my stop loss set in stone, and I would measure my move so I know that if it comes down there, am I going to be still okay if I lose that trade? Okay, so if I risk, for example, 100 pips and I go $1 a pip, and I know that I'm going to possibly lose $100 on this trade, but I have the potential to make $200 or $300 or $400 to the upside. But when it comes down, if I'm in drawdown $75, it doesn't mean that I'm going to panic. I kind of want to let the zones play out and let the trade play out. This is more, swing trading is more of a set it and forget it approach with proper risk management. Okay, it's not, I don't want to swing trade right now and then watch every 5 minutes what's going on. Because sometimes you get into a swing trade, you have a nice setup, it moves up 50 pips, and then you're so quick to close the trade because you're excited because you went up 50 pips, but your overall move could be a potential 500 pips. So it's kind of, if you're going to swing trade, that's what I'm saying, guys. You have to have the right mentality. If you're swing trading, you got to be swing trading. If you're scalping the markets, you got to be scalping. Very rarely do I turn scalps into swing trades, and very rarely do I turn swing trades into scalps. It's one or the other, and you need to choose. That's why I said some traders need to have 2 accounts. I have 2 accounts. With my broker, I have 2 accounts. One is strictly for swing trading. When I trade that account, I know I'm swing trading. There's no ifs, ands, or buts, no woulda, shoulda, couldas. I'm a swing trader with that account. So my mind is completely different the way how I trade that account. If I'm using my scalping account, I have a different risk management when I'm a scalper, okay? But we can do all of these things together. You can also have a live swing in the account and be scalping the markets too as a hedge. A lot of traders do that as well, and some traders do it really good with success, okay? But right now, you see how gold is kind of consolidating? It's found its neckline, but now what could happen? Yes, it could continue to move up here, absolutely, but selling pressure could also push it back down and test back down here, okay? Or it could just trade inside here for a little bit, okay? So this is now where you got to ask yourself, are you willing to take a buy from up here to possibly take out that high and move higher? Okay, that's one opportunity. Or are you willing to take a sell down here to possibly take out those lows and maybe push down to this green box? Okay, so when you're not sure, okay, then maybe we got to wait for more confirmation. I'd like to see maybe more green volume close above here, or I'd like to see more red volume close below here. Inside here, it's consolidating. If we look really quickly at the 1 hour candles, this is what the 1 hour candles are doing right now. See how the 1 hour candles have absolutely no direction, lots of indecision. So that's why we've kind of trapped this 4 hour box area. Grisel, good question. Will you take your entry in a small time frame or you wait for close of the candle and retest? Okay, good question. Great question. So these are 4 hour candles. Now, some 4 hour traders will want to get in a little earlier where they don't wait for this full 4 hour candle. You see how we have 2 hours and 45 minutes left to go. So there's a lot of time. So this is where, and again, you guys got to know, if you want to do this, you have to be okay with this, where you can come down to the hourly time frames. See these hourly? And now I'm waiting for hourly volume to close above 2000. You see right here, Monday, 9 a.m. Wall Street, we came up there and got rejected. 10 a.m. we came up there and got rejected. No hourly volume has closed above 2000 yet. So if the hourly volume closes above there and gives me a good retest, yes, I could enter on that hourly candle. But Grisel, my objective is not just to trade the hourly candle. That's for entries. So if I enter on the lower time frame on the hour, I'm going to flip back to the 4 hour in the daily, and I'm riding that 4 hour daily momentum. It's kind of like when we're scalping. You know, sometimes when I'm flip-flopping from the 1 minutes to the 5 minutes, I get in on the 1 minutes, but then I flip to the 5 minutes and I'm riding that 5 minute momentum. So the same exact mindset, same exact concepts, we can do that too, okay? So there is some traders that will swing trade and they enter on the 15 minutes, okay? So they're watching the 15-minute candles, watching for a 15-minute candle to close and give them a retest. They take the trade and then they're following the 4 hour volume with the same risk management on the 4 hours. So you're not trading the 15 minutes. You're trading, but you're just looking for entries. I wouldn't go lower than hourly, guys, because the 15 minutes candles can give you lots of indecision and kind of maybe shake you out of your swing trade. I would keep it hourly. Okay, hourly is the lowest I would go to enter to hold trades for throughout days. Okay, it's just my opinion, but some of you guys have perfected your style and you guys got it. But yes, but the objective is whatever you're entering, you're not looking, then you're trading on the 1 hour again. Okay, so if I enter on the 1 hour candle, I'm not just trading the 1 hour zone. I'm going to flip back and my objective is the bigger, higher time frame move. Okay, so right now we see what gold is doing. It's right in the middle of the neckline. Could it go up? Yes, it could. Could it go down? Yes, it could. So we got to allow it to figure out where it's going to go. Now I'm on the sidelines. So, you know, unfortunately at this time, sometimes we walk into an opportunity where there's a trade. In this opportunity, there's not an A+ setup. I might need to wait for something to happen up here in this higher time frame supply, or I maybe got to wait for something to happen either at the purple line or down in here. So this is where setting alerts helps a lot, guys. Okay, so what we could do is maybe set an alert up here and it will trigger us and it will notify us. Then we can come back and watch on the hourly or the 4 hour for a potential execution to take a trade. Okay, we don't have to follow this all day, every day, because you see, who wants to stare at a candle for the next 2 hours and 42 minutes? But if we put an alert up here and it comes up there, we'll get alerted and maybe we see maybe a possible rejection and we go into a sell up there, or there's a short squeeze and continue to buy out of there. If gold comes back down to this level, 1991, down in here, we'll have alerts and it will notify us, and then we can come and see what the market is doing. Okay, so this is what the beauty of swing trading is. You can take your time to do a nice top-down analysis. You saw we did monthly, weekly, daily, and you can set yourself up with some alerts, and when the volume gets up there, you can be notified. So if we look back on these 4 hours, if I had alerts anywhere in this green box, like when it came down here, and came down here, if, for example, I had an alert is right over here at critical areas in the market. Okay, so right here, here's a wick, a body to body. That's it. I just need that much information to give me an alert. Now what I can do is I can set an alert at 1960. If gold ever comes down to 1960, I want to be alerted wherever I am. If I'm wherever I am in the world, I want an alert to notify me that, hey, Ron, gold is coming into your golden zone in your big big higher time frame block, and I can see in the past where it came down here, picked up the liquidity, went back up, came back, picked up liquidity, came down, picked up liquidity. Maybe another opportunity is gold might come back down, give me an alert, and now I watch to see where the volume will close. Will it close above here? I buy, maybe my stop loss down here, and then I'm swing trading gold all the way back up here to come back up. So you can set alerts, guys, and follow your charts throughout the week. If you're swing trading, I would recommend that you have a couple charts you're looking at, not just gold. Give yourself a couple charts. It's not like where we're scalping the markets on 1 and 5 minutes. We have to be focused on every single candle opening up because we're scalping the markets. When you're a swing trader, it can be more relaxed. Swing trading is really nice if you have a busy lifestyle, if you're working, if you have a day job 9 to 5, if you're working shift work, if you got kids and you got just a busy lifestyle. It doesn't take a lot of time out of your day, maybe 15 minutes to do a top-down analysis on higher time frames, set up your areas with some alerts, and when it comes to you, you'll get alerted. You can look at how it's moving and maybe make a decision with proper risk management, and hopefully you get yourself in a nice swing trade and you can maybe bank bigger pips and scalping the markets. And it's less stressful. It's less stressful on you too. You don't have to watch every single candle play out. You put your stop loss in, your concrete stop loss in the market. You can put your TP in and maybe set it and forget it. Okay, but that's gold, guys. Okay, so what I'm going to do is, because now it's almost 2:20, I'm going to move over to oil. I'm going to do another oil analysis, not take as much time, but do you guys like these type of sessions? And what we can do is every week we can analyze, maybe gold is coming up to our critical selling area. I'll take a sell position with you guys, and we'll monitor it and things like that, just like we do when we're scalping. But right now, is it a good time to take a swing position on gold right now? I gotta still wait. I'm still waiting to see what will happen at this 2000 area. We went over the news this week. We got a big FOMC on Wednesday, and we also have NFP on Friday. So I know as a swing trader, is it a good opportunity to take a swing trade, whether you're buying or selling? There's going to be a lot of volatility in the market. So maybe I'm going to wait for this week to play out and let all that news get absorbed in the market. And I might be looking for a possible swing trade next Monday, for our next call on Monday. So we play it day by day as a swing trader, okay? You don't have to force trades right away. You can wait for the best time possible. Sport Lotto, but for swing trades, stop loss must be 100 pips. No, it doesn't have to be 100 pips. If you can nail a sniper entry on a 4-hour candle, but let's just measure the move of this. You have to, guys, you got to use your ruler, okay? If I was to buy, for example, if I bought this candle, okay, and I'm not doing it right now, guys. So, for example, if I bought right now in 1998, where's the most logical place to place your stop loss? Number one, you want to be below these lows, okay? You have to, okay? Unless you nailed your entry and you're right into profit. But right here, 1998, if I have my stop loss below 1990, that's 80, 90 pips, just right below there. The market could easily come right down because it knows a lot of people have their stop losses right here. Take us out at 100 pips, and then all of a sudden it goes in our direction. It happens to me as a scalper every single day. So now you gotta maybe, what happens if I want to put my stop loss at this area, in 1986, down here, at this area of support, okay? So you can see it's more than 100 pips now. Now my stop loss might be 120, maybe 150. But the objective is, I'm not risking 100, 120 pips to make 30, 40, 50 pips. I'm looking for a reward for a big move. I'm holding it for multiple days, hoping that my stop loss doesn't get taken out, and I'm looking for a big move. As a swing trader, you should be looking for minimum 1 to 2, 1 to 3, 1 to 5 on your money. So if you're betting 100 or 150 pips, your reward should be minimum 150, 200, 300, 400, 500 pips, okay? But you can scale out slowly along the way. So if you go into profit and you're up 50, 100, 150 pips, that doesn't mean you got to leave your entire trade wide open again. You can learn the scale out procedure. Maybe you want to take 25% profit out, go to a break even and let your trade continue to run. As it runs to each successive resistance level, make a decision up there where you can continue to preserve your pips and accumulate your account, just like we do when we're scalping. Some swing traders, they got targets. They wait for, like, let's say, for example, I bought in here. I'm placing my stop loss below this box, just like here when we do when we're scalping the markets below here. But my TP is up here at 2030. So it might take weeks and weeks to develop, or days, but I've kind of factored it in. I will measure how many pips I need to risk down there. It might be 200 pip risk. So again, I work out how much lot size I'm willing to risk on 200 pips. You work it out. If you go 10 cents per pip, you're risking $20. If you go $1 per pip, you're risking $200. If you go a standard lot, you're risking $2,000. Okay, so but everybody has different size capital accounts, so you have to manage that. I can't manage that for you. Just like when we're scalping the markets, I can't manage your account for you guys. But you can do the math in your head, or use an advisor to help you out with that. Okay. I need a glass of water. Rune. Okay. So are we clear that we're consolidating right now on the 4-hour range of gold? We're in the neckline. We did push up, nice big move, but it got rejected. It came back down. It's holding some support down here now at 1990. But right now, not good volume to be trading. So we got to continue to wait for something up here. Like I'll place a yellow line at this 2010 level. And we watch to see if it comes back up here. Maybe rejected. That might be a double top rejection and push down. And we could be looking to sell below this level. Okay, guys. So I'm going to move over to oil now. Okay, so let's take a look. We had gold in the book if you guys are trading. I'm going to now move over to US oil. So this is a completely different security. Okay, a lot of you guys like to trade oil. I love trading oil. There was some historic times that we just missed. If you guys remember when the pandemic started, where oil reached it reached negative futures. I have never in my lifetime seen oil hit negative futures. The last time it did that was the 1970s. Okay, so remember when we looked at gold chart, we went back to the 1970s. There was a lot of stuff that happened around the world and in the markets in the 1970s. So let's move over and take a look at US 30 in the next 30 minutes and look for maybe a possible swing trade on oil. Okay, so this is US crude oil. This is on the 4 hours right now. Okay, so the 4 hours are pushing down. Like if I'm looking, it's reaching some real critical levels down here. Okay, so but let's start higher time frame, monthly. Okay, so let's figure out how oil has been trading. Does anybody remember this move right here? Was anybody trading at this time? This was an opportunity of a lifetime. We have members in our group who are retired right now with this move right over here. Okay, so again, look back here, 1970s. Okay, 1970s over here. Can barely even see oil on here. Okay, so this is historic times. Okay, I have never in my lifetime seen this. I was born in '82. This is when? What month was this? April of 2020. What was something that happened in 2020, March, April? COVID, pandemic, okay? Everybody was March and April here where I am in Canada. We were locked in our houses for minimum 2 weeks where we couldn't go anywhere. So what is that going to do for demand for crude oil when we have no airplanes, when we have no automobiles, we have no trains moving, we have nothing. There's no demand for crude oil. And this was the first time I have ever seen this where the futures for crude oil went negative. When that happened, I asked myself, what is going on? Does that mean that the world is not going to rely on oil for that's it? No, that was an opportunity to buy futures contracts for oil, even if you bought the $10 contract, the 20, the 30, the 40, the 50, if you look at the area here, a lot of my buddies were asking me, Ron, what should we do? I said, buy the $40, $50 contracts. Are you crazy not to? Look at this area where it was support. Okay, so let's go back and do what we do. Was this area not support? If we look back in the past, it held. Yeah, there was that minor break, came back up, but holding. Again, we pulled back into $40 a barrel, pushed back up. So I'm not a financial advisor, guys. I'm telling my dad. Okay, so my dad asked me, Ron, what do we do here? I said, Dad, buy the $40 futures on oil. My dad said, are you sure? I said, do you believe in your son? He said, yes. I said, buy those. And my dad has a nice, healthy retirement right now. He bought the $40 futures just to come back to resistance. It came back here in a few months, and he made a good return on his money. Okay, but look at what happened since then. What was this? Was it a liquidity grab to come down there and take all those orders? If there was any orders down there, what happened down there? Ask yourselves the bigger question and figure out what's happening. But you can see how $40 crude oil, it's a very good range to buy. We're at $82 right now. If crude oil ever comes back down to $40, I'm going to load up on futures contracts for crude oil. And then if it does break, if there's an impulse break, it could possibly come down to $35 right down in there. If it continues to break, $18 could be a good buy. If it ever comes back down into this range where it's pretty much zero, yeah, I'm going to be buying a lot of crude oil unless the future is all solar and electric, which you need oil to to power electric facilities. I don't know if that makes sense, but you need oil and energy. Okay, so let's take a look. So there was opportunities, guys. If you miss out on an opportunity, there's other opportunities. If you remember in here, February 24th, 2022, we were trading live here too. This is when the first missile launched in Russia and Ukraine. This is where the demand spiked for oil to $130 a barrel. If you look to the left of the charts, guys, okay, what is our all-time high for oil? Up here, 2008. There was a financial crisis that happened in 2008. Okay, so right up there. Big red box. If oil ever comes back to 144, 150 a barrel, maybe we look to sell up there because history shows us that it was good selling opportunity. Here's another critical area in the market right here. How many times did we come up here and get rejected? Right up here, $115 to $110. Look how many months it came up there, got rejected, came up again, got rejected, came up again, got rejected, came up again, lower high. So let's extend this zone into the future. If we ever come to $100, $110 a barrel, might be an opportunity to sell or look for a potential swing position to sell oil. Now, I'm just kind of consolidating more and more and trapping more and more as I can. Okay, was this not a pivot in the market right here at $75 for oil? Yes, it was. Why is it a pivot area? Because the market came back up and I didn't shut it down. The market shut it down. It was a double top. Came up, back down. Came up, big bearish engulfing candle. Exactly what we learn on the 5 minutes. It closed below critical level. Look at your next monthly candles. Here's your swing position. Look at it. If this was a 1 minute or 5 minute setup, I would have sold this 100%. Look at, I always look for a pullback 50%. Where did it opened? There was not even any pullback. So it's coming down where it closed near the low. There's no wick. So as soon as it popped, short. You could place your stop loss 50% of this bearish candle at $70, or if you really want to give it room to breathe, you're above the previous high. That was a big monthly drop on oil. Okay, big move. And then it bottomed out the next month right in this critical area of demand. If you don't do anything also on a swing trade where it pushes all the way down and you don't do anything, yes, then it could potentially come right back up. But now let's continue with our analysis. Let's bring these zones across. So this one, let's bring it across. Are we above it? Yes, we are. So I need to flip this zone green on the monthly. Now when I look, this last month, July 2023, closed above. August came down red, about 50%, respected this green box, continued to push for a new high, closed as a bullish pin bar. Our next month, September, bullish ignited monthly candle, break the high, and then we come up to test these two critical high wicks at $93 and some change. So let's place a purple line right up here at these two high wicks. That's a critical time in the market. Why? Because look at how it was support right over here. With that green volume that closed above, it retested the purple line, went back up. It came back down red, right down to the purple line, and went right back up. Now we close with this big red bar on August 1st, 2022 below. Look at the retest come up and hit half of the red candle, 50%. So even on monthly, weekly, daily, 4-hour, hourly, 30-minute, 15-minute, 5-minute, 1 minute, 30 seconds, 5 seconds, I don't care what you trade. Pick your time frame and learn like the psychology of how volume moves in the markets. So we came and we got rejected 2 times. 2-time rejection makes resistance. Bring it across, okay? And bring it across, and we can see that we are getting rejected in this area this month. Okay, so it was kind of like an impulse break. Did any volume close above here? No. So if I'm giving myself an alert up there, okay, I'm going to put an alert. If crude oil comes up on the daily and closes above here, I could look to retest this, and that might be my swing buy to take it back up to $110 a barrel. Okay, that's a swing trade. Looking to fill that imbalance, monthly imbalance. Okay, if oil closes back above here and retest properly, I'm looking to maybe swing a buy and take it back up to one in this red box. If it breaks out, I could see exactly where it can break out. Okay, so you see how I'm just setting up my zones, and now what I see on this monthly is it opened. We have, what, 1 day and 4 hours still left on this, like similar to gold. It's so far a monthly bearish engulfing candle. We might engulf our previous month, maybe even engulf 2 months down here if it closes below 81.50. But look at our monthly low. It's lined up exactly where this body was. Okay, right here. Look at our low. It's at this body where this bullish pin bar formed. Here where we closed above the resistance. So now we're kind of barcoding on the monthly where it came up green, coming down red. Will the next month in 1 day, tomorrow, will it open back up green and come back up? If we come back up, I'm looking to retrace up to 50% of our bearish engulfing bar. Where's half of it? Half of it is right around here, right? I'm just eyeballing it, and I smoked a big joint right before this call. So if I can do this, I'm sure you guys can do this. But look over here. Not only am I looking at half of it, but I'm looking at critical bodies right over here and a critical wick right there. So I'm going to draw like a yellow line right here. Body, and a wick. And it's roughly 50% of the monthly candle coming down. So if we still stay below this, like let's say next month we come up, it comes up green, I'm testing to see what will happen at 86.50. If it gets rejected here, it might come back down and sell below here, then we drop. That might be a nice opportunity to take a swing sell, and oil could be coming back down to $75 right down in here and maybe drop further. If it drops, okay, if it breaks here, I got a lot of impulse wicks, but there's my body to body, $70, nice whole number, okay, right there. Okay, so this is monthly. This is bigger approach, okay, but what is the overall monthly move? We came up here, okay, so let's just go back. February 2022, Ukraine-Russia war started, okay? There was a lot of demand because reduced supply for crude oil, okay? So we hit $130 a barrel. It came back up. Couldn't break the 130, 120, kind of maxed out. Then the volume closed below. Look at this beautiful retest possibility. Okay, it closed below with red. It came up green, rejected 50% and broke down. This could have been an opportunity to maybe look for a swing sell position on oil, and it would have been a really nice sell. Now, that happened. That's in the past. You and I, what we got to do is look for a future move or predict the next move. Where did we find a good base of support? So you see down here, $62 Look at all these wicks at 62. Nothing broke down here, okay? So the buyers of gold are holding 62 there. They held 62 again when we came down. So $62 is a big critical demand on a higher time frame. Okay, if we ever get back to 62, that might be a really nice area to maybe look for a possible buy. If there's an impulse breakout, okay, if it breaks 62 and drops, to pick up liquidity, where could it go down? This is where you and we got to look to the left of the chart, other critical areas. See here how there was resistance right here, then we kind of broke above it and came right back down. There's resistance right here, possibly turn to support right here, resistance right here. I'm looking around $55 a barrel. Okay, if it does break that 62, why am I looking at 55? Because there was resistance, there was resistance, there was resistance, turn to support here, and there it is again, resistance with volume closing below. Now we're above it. So if we have like an impulse break on the monthly, it doesn't hold 63, 55 might be loading zone. Okay, do you guys understand what I mean by that? I'm trying to look where the market will come in and pick up the higher low. Okay, so now let's analyze what's going on the monthly right here. We've got, starting in July, midsummer, demand for crude oil came back up, pull back, hold. Right here, September, nice strong month, but we came up. So it did make a higher high above those two previous high wicks. So technically, it did advance the higher high uptrend, but we didn't close with big volume above there. It got rejected and we closed right here. Next month, this month, we opened, and remember we're closing today, tomorrow. So we came up again. It was green, but we didn't even fill our wick to continue to break out. Where could we have possibly broken out to? $100. Look at how easy it is to spot where we could have moved up to. Right there. Wick, body, body, wick, close below, sell below 100. 100 is a nice psychological area. It's a nice whole number. If we were to break above $93, $94, it could have easily came to 100 and maybe possibly more. But you can see that they've lowered the supply now and pushing it down. So we got to follow this big monthly candle. But I'm not going to just follow the monthly candle. So what I got to do is start to break this down into weekly. So I'm dissecting the monthly candle now down into weekly. How many weekly candles go in a month? 4. Okay, so what do we see up here? See the spin top candle now on the weekly that broke September 25th, the high, and it came back and it closed right below there. Look at our weekly candle, came back up, lower high, could have possibly entered a sell position below here, but you would have gone down to a daily or a 4-hour to watch the break of $88. Could have possibly taken a swing trade. But it came back up, lower high, push right back down. Come back and close here. We opened this week. Right over here, we got 4 days to go. They're bringing it down red. So now this is a critical level. This week, is oil going to break down this support area at $82 right here and continue to push down to this box? So right now, it's bearish on the weekly. Where do we have our weekly resistance? Well, look at the body where we closed and look at where we opened. There was no opportunity for buyers to even advance it up to test 50% of the weekly volume here. So you can see that the lower weekly supply is right there. So I'm going to draw a red box because I really want to kind of trap this because I want to go down to the lower time frames. So you see how we didn't even penetrate up here. So there's pending orders waiting to be filled in here that never got filled. So if it does come back up, it might push down. Okay, so this is a critical area we're watching to see if it breaks. And if oil pushes down into the green box, $75, it could sell all the way down in there. And this might be an opportunity to look for a swing buy and bring it right back up. Unless volume closes below here and we flip this red and then it continues to push down to 70 or here. So I'm just trying to figure out my bigger areas that I want to trade. But I don't necessarily want to take executions on the weekly. So what I do is, next thing I do is break it down to daily. So let's look at how weekly candles, our weekly has been trading on daily. It's barcoding. Look at how ugly it looks. Tuesday, October 24, red. Wednesday, October 25, we came up green. Thursday, October 26, we came back down red. Friday we came up green again. Today we're coming back down red again. So this could be a bear flag developing, where once it starts to break below this purple low at $81.50, we could have selling pressure, push it all the way back down to $76, $75. Okay. Is there a pivot area in the market? Yes, there is. There's also a pivot where it pivoted right here in the market. So right here was a possible pivot where it closed above, retested the yellow line, retested the yellow line, retested the yellow line. Nothing closed below there. It went back up. It came back down to the yellow line. It went back up. Here we had a first body close below there. It did push down, but no real volume, kind of settled down there. It started that big bullish run, and now we might be coming back down. So if we break purple line, we could be coming down and testing $79, and we see what happens down there. But on these dailies now, okay, so we have 3 more hours left. Is this going to completely close below all this structure? And are we going to get ready to take this out? We could retrace right back up, but if we do, where's my retracement point? Look where most of the majority of the volume was at these bodies. Okay, and then this is where I get ready to maybe look for a 4-hour trade. So here was body to body. There's a body, all of the volume held above this yellow line, $83.50. If we retrace back up, I'm looking for the daily supply to hold below here. I might be looking for a 4-hour trade. So now I'm going to go to the 4-hour. Okay, and then these are my zones. Now I see it's kind of like a double top up here, push down, we pull down here. This 4-hour candle is going to close in 3 hours and 15 minutes at the end of the day. So I'm going to see how it will react down at this weekly low. If it comes down here, maybe the 4-hour candle can close below here, possible retest, and maybe sell continue. But if the 4-hour candle picks up liquidity down here, comes back up and closes in this range, and I flip this and it holds, that might be my 4-hour swing buy that I could buy here. And I'm looking to take out these previous highs right over here and look for that continued break to these highs right up here. And that could be my swing trade for the week. Okay, how many pips is that? Well, $83 to 88. That's about 500 pips up there. Okay, if it can get up there, $5 move. That would be a nice swing. And then if I'm looking to buy up here, I got to see what type of structure these 4-hour candles build, and maybe I know where to maybe potentially place my stop loss below there. But if I'm looking for 500 pip move for profit, I'm probably going to risk 100 to 200 pips. But I can't just guess that I want to see structure. So I want to see how it's building higher lows, where it's closing above. Maybe I know where to place my stop loss. Okay, so right now, again, it's still early because we're now consolidating below this critical area. So if I'm now boxing this area in, okay, if I'm a swing trader, maybe I want to box 50% there down to that purple line and just watch what's going on in here. I don't have to watch every single 4-hour candle, but I'll place an alert up here on my chart where I want to be notified at anything above 83.75 to look for maybe something up there, or I also want to be alerted for something below 81.50 below there. Remember our directions on oil. It could continue on the 4 hours to accumulate inside here. Okay, that would be where I would be scalping the zone on lower time frames. But we also know that it could accumulate and come back and close above here, maybe retest this. Then we get our swing buy opportunity. Or sellers could continue to push it down below here, close, retest this, and then we get our swing sell opportunity to come down into here. There could be possible fake outs as well. So you also got to watch too. That's why I watch to see if it's an impulse 4-hour candle, how it closes, because it could just come up here, get rejected, and then push right back down, close below here, and retest this. And that might be my opportunity that I'm going to sell the market, not buy, but I'm going to sell. But I'm watching this zone. Whatever happens here, I'm watching the zone below here, because it could also be a liquidity grab to the low, and I could turn into a buyer down there, where I see it come down, but it comes with a wick. It comes back and it closes above here, and then retest this, and I'm buying there to take it back up to here. Then I know that they just came down to pick up the liquidity. That's why I also look where the body of the candle will close, and I look for a retest to either sell, or I look for is it a fake out for a buy opportunity? So the same thing I'm doing when I'm scalping, but now it's just on a higher time frame. So I had this question earlier. Do we have to just watch the 4 hours? No. You can bring it down into the hourly. You can take your trade on the hourly, but then you got to remember that you're swing trading. So then you got to concentrate on the higher time frames, 4 hour daily. Here are our hourly candles right now. Do these look like nice hourly candles to be trading right now? I could be scalping these things on lower time frame, absolutely. But even if I was an hourly trader, there's no real indication where the market wants to go right now. It's accumulating. It's figuring itself out. The buyers are bringing it up, sellers are pushing it down. I'd like to concentrate on what will happen up here or concentrate what will happen down here. And that could be my swing trade. Okay, so guys, I'll give you guys this chart also if you guys want to follow these zones, because I have about 10 more minutes. Do you guys enjoy swing trade analysis? I know everybody wants to get into the markets and just scalp the markets, but it's important to learn both worlds. Okay, I have love for swing trading as well. I've done a lot of swing trading in my lifetime. I'm an investor. I love following higher time frames, but there is also, you have to be patient and disciplined with swing trading as well. It doesn't mean that you got to take impulse trades and get reckless. You still have to look for A+ setups. You still got to look, you still got to manage your risk. Okay, so just because you want to be a swing trader, that doesn't mean that you got to forget all your risk management and just go all in on a swing trade. You still have to allocate a certain amount of risk. But this is much different than scalping the markets. It's less intense. It's less stressful. It causes less anxiety for some traders. And some traders really do enjoy the benefits of being a swing trader, because not everybody has the ability to be in the markets and watch what's going on for 2-3 hours a day, because a lot of you guys have work, a lot of you guys have families, but there is opportunities for swing traders as well. So I'm going to do more of these classes every single Monday if we can. We'll look at different securities. So today we looked at gold and US oil. Next week we'll look at indices. We'll look at S&P. We'll look at Dow Jones. We'll look at Nasdaq. The following Monday we'll introduce currency. We'll look at GBP USD. We'll look at GJ. We'll look at EU. We'll look at minors, majors, whatever you want. Okay, it doesn't matter. But I'd like for you guys, if you're interested, to learn about swing trading. It does help. You could if you have the mentality, you could do both ways. Like, you could look for swings, but you could also do intraday trading and scalping while you're waiting for a nice swing trade. This is where you can watch multiple charts on the higher time frames. So pick maybe 3 charts that you like to swing. Because while maybe oil and gold are developing or accumulating, maybe you might see a great swing trade on GBP USD. So what I always tell everybody, whether you're scalping or swing trading, have one forex pair that you really do like to trade. Have one commodity that you like to trade, whether it's silver, gold, oil, okay, your choice, and have maybe one index related security that you do like, whether it's Nasdaq, US 30, S&P, whatever it is, okay? Have one of each, and then maybe you'll figure out which one is best for you. Maybe you might see different opportunities while you're waiting for one to develop. And then also, guys, following the overall trend, okay? So when we look at oil, when we look over here, yes, it's overall bullish from here, but when we hit these highs up here, it's pushing down. It came back up a lower high, coming right back down. So we're watching to see, are they going to take out this low and come down to maybe $79 or back down to this big block, or it's just going to accumulate down here and get a higher low and come back and close above here, and we could be looking for a buy to continue to push and come up to $85, and maybe we get a nice big breakout above there. Okay, so that's, and then if you want to add indicators too, you can certainly add indicators on your 4 hour. So if you like the 9 EMA, we're below the 9 EMA currently on the 4 hour. If we add our 200, We're below our 200. Our 200 is in our bigger selling block up here. There is death crossovers as well on higher time frames. That's where the 9 crossed below the 200. Now let's put the pieces of the puzzle together. Okay, now when I look at this, it makes sense. But always, everything makes sense when we're backtesting. It's more when we're trading live, but sometimes you have to backtest to learn. So here I see a bear flag. I could have consolidated this range, and now I have information coming from technical indicators. Do I rely on technical indicators? Not always, but they're good for reference. Now if I had a sell bias with a bear flag, did any of the bullish candles come and do anything above 50% of this big bear bar? No. So bear flag. Now I have a death cross where the 9 crosses the 200. That might now start to complement or give me confluence to my sell position. Now I look for a 4-hour candle close. It closed. There was a retest. That was a possible opportunity to take a swing sell on the 4 hours. And yes, it did come down a little bit down. It did bleed out all the way down there. Hopefully maybe that was enough pips for you to get out of the market or secure something, because it came right back up, rejected, back down. But now we're getting a higher low, higher low. It's coming right back up here. Nice volume closed above, but we didn't get that big push. So now it's trading back down in here, consolidating in this flag. So we watch to see what will happen up here again or below here. As it accumulates in here, it might form another flag, and we have to wait. How long did this opportunity take to sell from here? These are 4-hour candles. So you got a couple days in here that it took 3 days to develop before it started to break down. Okay, and then you got to use your ruler too. How much you're looking to take out of the market. Obviously, we want to let trades run forever and get the most out of them, but you use the same technicals that we learned when we're scalping for swing trading. So if I was to take a buy up here, first thing I'm doing is measuring the move up to here. Because if I'm looking to hold the trade all the way up there, I want to know how many pips it is. 83.50 to about 85.50, that's 200 pips, a little more. If it comes up to 86.50, I know it's about a 300 pip profit up there, and that could be a target. But how many pips am I willing to risk to make 200 or 300? It all depends on what type of support is created down here, because maybe I want to be put my stop loss below the previous lows and give it more room to breathe in case there's a pullback. Maybe I want to add a second position on another double bottom. So we'll do also we'll do webinars also on adding positions to trades, and we'll learn more and more about that. Okay, so guys, I'm losing my voice right now, but let's put these two side by side. Hit the like button if you can on YouTube, guys, if you learned anything new today, if you gained any knowledge, if you do like swing trading analysis, because I want to do these more often. I kind of want to have each day dedicated to something. Like Mondays, we could do swing trading like this, analysis. Hopefully we find something in the markets. Thursdays, we keep for 1 minute scalping. And then Tuesday, Wednesday, Fridays, we could do something in between. This Wednesday is FOMC from 1 to 3 p.m. Make sure, guys, you are aware of that. And also Friday morning, NFP. So looking at how volatile this week is going to be, it's going to be very volatile. So make sure you know that when you're trading, okay? Even from today, make sure you know. Some traders take this entire week off. Believe it or not, some traders take this entire week off because they know how volatile the markets are going to be. Maybe they feel more comfortable trading next week once all the dust settles, and then they get back into the markets. Because a lot of times when we're trading NFPs and FOMCs and craziness, we tend to give back all of our gains to the market, where we didn't even have to be trading these volatile days. We could have been relaxing or taking it easy and watching what the market is doing on FOMC and NFP. If you're going to trade those days, make sure you allocate a certain amount of risk. If you blow up your accounts on those days, what else would you like me to say or SST to say? We've been saying this for over 4 years now, to manage your risk. If you're going gambling on NFP and FOMC or any red folder or any market open, you're a gambler. You're not a trader. I hate to say this, but you're a gambler. Okay, you need to separate yourself from gambling and trading. It's once you figure that out, you're going to make your trading that much easier. But figure out, guys, if you're still gambling in these markets, is it getting you ahead of the game? Is it getting you anywhere? Are you compounding your account while you're gambling? If you are, there's going to be some traders that say, Ron, I am. But it might come down to that one day where you make that one bad trade, you over leverage, and all of your hard work over those days, months, weeks could be wiped out in one candle. It's happened to me. So that's why I'm telling you guys, you don't want it to happen to you. It will ruin you as a trader. It will ruin all your progress. It will ruin your psychology. And you know how that vicious cycle goes when you lose confidence at what you're doing. So I'm just saying, guys, risk management is the most important thing about trading. It is more important than understanding candlesticks. It's more important than understanding live liquidity in the market. It's more important than finding where support or resistance level in the market is. If you know all of those things and you still don't know risk management, you're not going to go far in these markets. You're going to continue to lose. And we don't want that. We want to see you guys winning. Most of you guys that are taking your risk management and you're respecting it, you guys are doing really well in these markets. It's not always the going to make you the most money, but money over time compounding will add up, and then you're going to start to thank us later on. Okay, guys, so that's it for me. I hope you guys enjoyed today's. It's a little different. Yes, we could have scalped the market. We probably could have found some buys or sells on the lower time frames, but it's also nice to also reach out to the traders that want to learn how to swing trade, because trading is not just scalping. Trading is not just low time frames. Trading is everything. With trading, you can become an investor. There's so much more you can do with trading. Intraday trading and scalping for me is just a means to get some money, and then what I do with that is I invest it in the markets to get a bigger return. I like to look at dividend paying stocks. I like to look at other securities that over time give you a nice return where it's set it and forget it. Apple is a long hold for me as well. So what I like to make in the financial markets with scalping, that doesn't mean I just go out and buy fancy cars and things like that. I take what I make and I put it back in to get more return. So trading is also learning how you can have multiple streams of revenue giving back to you over time. And as you get older, my age, 41 and older, you want passive income, because our bodies start to break down and we can't work as when we used to when we were younger. So it's nice to have passive income coming in, because my body is breaking down right now. I have back and shoulder pain and headaches, and I'm not 20 years old anymore. I can't go work like I used to when I was 20. So I appreciate passive income, but it all comes from what we take out of the markets and investing it properly. Okay, so there's a lot to learn about trading, and it can lead you what you want to do in the future. Okay, so not all trading is just scalping. I love scalping, believe me. I'm going to be a scalper till the day that I die, but I also like to teach an SST. We're going to start a program to teach you guys how to maybe do something more than just scalping. Okay, so there's a lot to learn, guys. Remember, it's a lifelong financial education. Be a student to the game. Be a student to these markets. Continue to absorb as much knowledge as you can from anybody that you see as a mentor or a model or someone that you learn from. Remember, it's not just SST teaching. There's multiple mentors out there all over that you can learn from. Take a little bit from everybody and put it together and figure out what works for you, and you might turn into one of the best traders possible. Okay, guys? So, but that's it for me. I got to go pick up some kids from school, and I will see you guys tomorrow. Tomorrow we'll get back into the markets. This time we'll get scalping the markets on the lower time frame. But just understand, everything that we just did today is the same thing I do when I'm scalping the markets. Normally when I scalp, I go daily, hourly, 5 minutes. Right here we did monthly, weekly, daily, and maybe you execute on the 4 hour. So it's nothing different. The zones are larger, The blocks are bigger, the candles are bigger, there's going to be consolidation, there's going to be fake outs, there's going to be everything we see on the 1 in 5 minutes, you'll see on the higher time frames too. But this might teach you how to hold trades longer. But guys, please respect your risk management. If you don't do that, then it could be game over on any time frame you trade. Okay, it doesn't matter whether you're scalping or swing trading. Make sure you understand how much you're allocating per day. Okay, your risk management. If I'm taking a swing trade, for example, this week, let's say I'm gonna take a swing on gold, I might risk 1% of my entire account for the entire week, and that's my weekly risk. I want to get in a position, maybe risk 1%, and maybe look to make 2% or 3% out of that trade, but I'm giving it multiple days to breathe. I'm not looking to take a trade and get in for the first hour and get out. I'm looking to build on this position for multiple days or even multiple weeks and then get the bigger reward. But if it does stop me out in the time being, I'm only risking, again, 1%. So can I recover from that? Yes, I can. If I risk 10 or 20 or 30% on this swing trade and I lose that, a third of my account might be wiped out. Can I recover from that? No, that's going to mentally break me down. So there's risk, how much you're willing to lose. Measure the moves too, because these zones are much bigger on 4-hour daily candles. Okay, when we're scalping, it might be a 30 pip zone. When you're looking on the 4 hours, it might be a 300 pip zone. Okay, but remember, lower your lot size if you're looking to hold positions longer. Okay, but thanks guys, I appreciate all of you guys. Let's all have a good day today. We appreciate if you can hit the likes and subscribe to the channel. Join our free Telegram group, guys. It's pinned at the top of the YouTube. And if you want to join SST and join the team, you're welcome. StockSniperTrading.com. We'd love to see you on the team. Great Discord community, and we have much more coming very, very soon. Okay, thanks guys, and remember, it's almost the end of the month. Okay, tomorrow is October 31st. Lots going on, so careful trading this week. This is one of those weeks where you have to use a lot of caution this week. Even if you don't take as many trades this week, it's seen as a positive. You have month end, you have a new opening monthly candle this week, you have FOMC, you have NFP, and you have multiple red folders going through every session in London, New York, and in the Asian session. So just please be very careful when you're trading. Okay, thanks guys, have a good day, God bless, and we will see you guys tomorrow. Thank you.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AFX, we have you covered. The future of Forex is zero commission. Here at AFX, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stock Sniper Trading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, Refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.